Hi everyone, this is Mike the Mortgage Jedi, and today we're going to talk about an important topic that every potential home buyer and homeowner needs to understand: mortgage points. Mortgage points can have a big impact on your interest rate and overall cost, so it's critical that you know how they work. So let's first talk about origination points. These are fees that lenders charge, usually around 1% of the loan amount, just to originate the loan. This is a standard fee, but what you'll want to watch out for is lenders who try to charge multiple origination points, which is not normal. So for example, let's say you get a $200,000 loan, a standard 1% origination point would be $2,000. But some lenders may try to charge 2 or 3 points, which would be $4,000 or $6,000 respectively. That's way above industry standard, and you should be wary of any lender trying to charge those kinds of excessive origination fees. The reason lenders may do this is to try to pad their profits or make up for offering a lower interest rate. But as a borrower, you need to be vigilant and push back on any origination fees that seem unreasonably high. Your goal should be to find a lender with a straightforward, transparent fee structure that aligns with industry norms. Now, the more important points to understand are discount points. These are fees you can pay to buy down your interest rate. One discount point equals 1% of the loan amount. So a $500,000 loan, 1 point would be $5,000. Now, the tricky part is that the amount a point will lower your rate changes daily based on the market conditions. A point may only lower your rate by 0.25% one day, but 1.25% the next day. You need to do the math to make sure buying points makes financial sense for your situation. For example, let's say the current market rate for a 30-year fixed mortgage is 6.75%. If you want to get to 6.5% rate, it may cost you 1 discount point. But the next day, that same 6.5 rate may only cost you 0.5 in points. So the value of those points can fluctuate quite a bit. As a borrower, you need to work closely with your lender to understand exactly how much each point will lower your rate on the day you're ready to lock in your loan. Don't just assume that 1 point will always equal 0.25% rate reduction. The math can be more complicated than that. Some lenders will try to push you to buy as many points as possible, even if it doesn't make sense for you. They may do this to qualify you for a higher loan amount or just to make an easy sale. As the buyer, you need to be very careful and make sure the math works out for you. Now, if a lender is charging a lot of points without explaining the cost, that's a red flag, and you should consider working with somebody else. You need to understand exactly how much you're paying in points and what the impact on your interest rate and monthly payments will be. One trick some lenders use is to quote you a very low rate, but then bury the fact that you have to pay several points to get that rate. That may make the rate look attractive, but the overall cost could end up being much higher than if you'd gone with a lender who was upfront about their pricing. So, in summary, understanding mortgage points is crucial when buying a home or refinancing. Make sure you know the difference between origination and discount points, and do the math to see if buying points will actually save you money in the long run. If a lender is being pushy about points, that's a sign to be cautious. As always, feel free to reach out if you have any other questions, and as always, may the rate be with you. Take care.